Hi everyone, this is Biju, Department of Commerce, Kristu Jayanti College. So this session is about discussion and problem solving exercise to analyze and interpret the financial information. The financial information, which is anything which is related to financial aspects and financial performance of an organization. So this session we are going to discuss about the accounting information system and the financial statement of analysis and their interpretation. Here, an accounting as an information system which provide information to the parties. These parties, it may be outsiders or within an organization. So outside parties, say example shareholders or creditors or some others, financial institutions and all. So in that an organization, they are providing these kind of reports to outsiders also. Say example, the investors, they are taking the decisions to invest an amount in an organization. The same thing within an organization also. Some of the parties, they required these informations. So here there are some of the interested users of reports or financial statements or informations, that is internal users and external users. So accounting reports or informations or statements, so these are known. It is mandatory to publish as per the law for all the organizations and all. Internal users, so within an organizations, the management, it consists of within an organization, the managers, unit managers, supervisors. So within that, there is required this information to take the managerial decisions for the efficiency of the organizations. So that is chief executive, financial officer, business unit manager, store manager, line supervisors, etc. So this entire thing we can say within an organization, the managerial level, the management has, there is required this report and they are taking the decisions and all. The external users, that's the present and potential investors, shareholders, that is shareholders, creditors, so that is bank and other financial institutions, tax authorities, regulatory agencies, trade association, etc. So already mentioned, it's mandatory to publish the financial information or reports to the outsiders. It may be through the website or magazines or journals. It's mandatory, they have to publish. So here, say example, the investors. Say investors wants to invest an amount in an organization, any of the organization. They can check the reports or they can go through the website and they can download the information and all. So here the financial statement analysis we are going to discuss. So what is the purpose of the financial statement analysis? So financial statement analysis, that is the informations we are preparing and it's required parties we are providing. So they have to take the decision. Say example, as previously we mentioned, the external parties, say example outsiders, they are taking the decision to invest an amount in an organization based on that financial reports, and within organization also, the internal parties management, they are taking the decision for the efficiency of the management. So here some of the purpose, let me discuss. To help economic decision making, so that's the main thing we can say for the internal parties and external parties. Based on the report, they are taking the decisions. Say example, outsiders parties, they can go through the website, they can download their reports in that particular companies, or through any other sources they can get the informations, and based on that they can decide to invest an amount to a particular organization. The same thing for the internal within the management, internal users, the managers or the superiors or chief executives. So they are also taking decisions based on the reports to measure managerial efficiency of a firm. So within an organizations, the internal users, so they are taking the decisions based on the reports. They can take new suggestions, they can take new decisions, and they can suggest some new ideas also based on the data to ascertain the operating performance of a business. So here the financial statement, they can assess the operating performance through various financial statement analysis. Say example, profit and loss account or balance sheet or some other ratio analysis. They can assess the operating performance of the business organizations to determine the solvency and liquidity of business and to determine the debt paying capacity of the firm. So these all are, we can say, it's the main purpose of the financial statement analysis. It is useful for the internal management and also for the external users also. Types of financial statement analysis. What are the main types of financial statement analysis? So here, based on the mode of analysis, we can classify vertical analysis and horizontal analysis, and based on the material used, external analysis and internal analysis. So what do you mean by vertical analysis? So vertical analysis is nothing but within an organization, within the particular year, they are analyzing, and then after they are preparing the reports, and based on that they are taking the decisions and all. So vertical analysis, say example, common size balance sheet, common size income statements. So these and all within the particular year. Say example, the common size income statement. The common size income statement, the particular year, based on the sales, we are comparing some other items within organization, and we find that particular percentage within that. So these are all within an organization, within the particular year, we can compare, we can take the decisions based on that. So say example, vertical analysis example, we can say that is with common size balance sheet, common size income statement, and ratio analysis. These and all we can say it's a vertical analysis. What do you mean by horizontal analysis? Horizontal, the word horizontal, you can say the compare the two different years. It's like a horizontal lines. This particular year we are compared with the previous year profit or statements and all. We can say it's a horizontal analysis. Say example, comparative balance sheet, comparative income statement, we can say it's a horizontal analysis, and trend percentage analysis also we can say it's a horizontal analysis. So they are comparing 1 year statement with the previous year or another year we are comparing, that's we can say it is a horizontal analysis. Another classification based on material used or the parties involved. So that is external analysis and internal analysis. So external analysis nothing but the external parties they are using their reports, we can say it's external analysis, and internal analysis we can say within an organization, we can say that is internal analysis. So external parties, the outside parties and all. Outside is, say example, shareholders and the creditors. So they are also using that report, they are also analyzing. Say example, researchers, they are also analyzing the reports. Internal analysis, that's we can say within an organization's management, they are taking the decisions and analyzing. The tools or techniques of financial analysis. So there are different tools are there. We can discuss one by one. First of all, the comparative statement. The comparative statement, so that means we are comparing 1 year statement with another year statement. So that's example, comparative balance sheet, comparative financial statement, that's our income statement. Another one, common size statement. The common size statement, so that is common, say example, common size balance sheet or common size income statements and all. So within the particular year, the same year, we are comparing or we are analyzing the data, we can say it is a common size statement. And trend analysis, so trend analysis nothing but we are comparing 1 year statement with another year statement, that's we can say it is a trend analysis. Ratio analysis and cash flow analysis. So ratio analysis, within the particular business organization, within the particular year, we are analyzing the any of the particular item in profit and loss account or balance sheet, we can say it is a ratio analysis. So that is also vertical analysis. And cash flow analysis. So cash flow analysis, the cash inflow to the organization and cash outflow to the outsiders, that's we can say that's the cash flow analysis. So these all are the tools or techniques or financial statement analysis. So let's start with the first one, comparative statement analysis, that can be done in comparative income statement analysis and comparative balance sheet analysis. So one illustration, prepare comparative income statement with the help of the following information. Here one example, it's there, sales, cost of goods sold, indirect expenses and income taxes and all. So normally you know that is sales, here sales, if you are minusing the cost of goods sold, we will get answer, so that is a gross profit. And if you are minusing the indirect expenses or some other expenses, administration, selling, other expenses, will get the profit before tax. So after that, if you are minusing the income tax, will get answer the profit after the tax. So in this question, it is mentioned in percentage. If it is directly given in the question, an amount we can take. So here sales, you know that sales, if you are minusing the cost of goods sold, we will get answer, it's a gross profit. And if you are minusing the indirect expenses, we will get operating expenses. And if you are minusing income tax, we will get the profit after tax. So here 2 years it's mentioned, 2020 and 2021. So how much is increasing, and we are calculating the percentage of increase or decrease. So here 2020, so that's a 10,000, sorry, or 10 lakhs, and 2021, so that is 16 lakhs. So difference, so that is 6 lakhs. So 6 lakhs we are taken, that's a percentage, how much percentage that's increased, that's we can say 60, how we are calculated. So that is 6 lakhs divided by 10 lakhs into 100, so that is 60%. The based on the same thing, the remaining also we can calculate. The cost of goods sold also, 5,30,000 divided by 7,50,000 into 100 will get answer 70.67. So here all the percentages and all we can calculate based on that formula. So here profit after tax, it's mentioned 65%, 92%, that's increase. So that means 2020 it is 67,500 and 2021 that's 1,12,000. That means there is an increase in 44,500. That means 65.92% of 67,500, that's 44,500, that's increased in the next year. So that means its interpretation, that means this organization or this statement, so there is a favorable, there is an increase in that their reports or items and all. The same, another one, the comparative balance sheet. So comparative balance sheet also we can say that same calculations. You could here it's mentioned liabilities and all, and assets also there. So here the same method we can calculate. 2020 it's mentioned, 2021 it's also there. So there is an increase, that means we can say it is a 2 lakh rupees, there is an increase, and the percentage, that is 50, that means 50% of 4 lakh, that is 2 lakhs rupees, it's increased to the next year 2021. So that's such equity share capital. The same calculation for others. So total liabilities and capital here 2020 8,62,000, so that means 22%, 22.04% of 8,62,000 that is 1,90,000 increase to next year. The same for the total asset, 22.04% of 8,62,000 increase to next year, that's 1,90,000 increase to next year. That means all the statement, all the increase percentages and all, there is a, that's equity share something, it's an increase, and the same thing creditors and also it's a decrease. So that means there is a favorable or efficient in an organization and all. So equity share capital, it's an increase, but at the same time creditors we have there is a minus figure, there is a decrease in that. So there is no creditors, we are not utilizing the creditors amounts and all. The same thing here, sundry debtors also, it's like a minus figure. So that means there is no credit transactions and all, like and investment also, that also it is decreased. The company is not going to invest much amount. And the last one, the common size financial statement. So that is mainly include common size income statement and common size balance sheet. So here also the same statement, sales, cost of goods sold. So if we are minusing the cost of goods sold from sales, we will get an answer. So that is a profit. So within the profit, if you are minusing administration expenses and selling expenses, we will get answer net profit. The same calculation, sales, we are minusing cost of goods sold, will get answer gross profit. Then we are minusing operating expenses or indirect expenses, will get answer. So that is a operating expenses we are minusing, we will get answer net profit or profit before tax. So in this question there is no tax, it's mentioned, so that's we can consider as net profit. So how much percentage increase? So here the previously we are comparing one year with another year, but this session, this common size statement within the particular year, say example 2020, so that is sales we are taken as a 100% and based on that remaining items we are calculating. Say example cost of goods sold 600, so 600, that means 60% of 1000, so that is 60%, and gross profit also 40% of 1000, that's a sales. So here we are taken sales as a base for that. The same for the next year. So here this common size we can take as a consider, we can say common size, so that is a vertical analysis. Thank you. Remaining statements we can consider next class. Thank you.